Hello and welcome to this week's Ferrari Financial Market News Summary. Well, it was a bit of a roller coaster week on the markets last week, and of course Friday was the big day when there were a number of factors that conspired to make Wall Street decide that it was time to maybe take some money off the table. Mainly the overhang of still relatively high interest rates, even though there was a bit of a pullback towards the end of the week. But really it was the subprime problem rearing its head again, but this time being the problem really being admitted by the Federal Reserve spokespersons during the week. They said that hedge funds involved with the subprime market would be seriously affected. And of course this had a knock-on effect for the whole financial sector, which really led the downward trend on Friday. And with both Google and Microsoft missing their analyst targets, it was a bad end to the week. The chart I want to show you now is the longer-term 5-year chart for the Nasdaq Composite Index. The reason I want to do this is because not only do I want to show the obvious long-term trend line which we've shown before, going along like this, I also want to show you the top line forming a very tight channel for the price movement over this last 4 to 5 years. And if I draw this top line in to where we are at the moment, you can see we've got the price movement staying within this channel quite deliberately, and showing that we are in fact at one of those extremities at the moment, touching that top line, and we don't feel there is really any sparkling news out there which would convince the market to break through this top channel anytime yet and increase the angle of the upgoing trend. Therefore we feel the likelihood is still a return to the lower line again, which could be as low as 2,200 for the Nasdaq, and that is just returning to this long-term uptrend that we've seen over the last few years. And this could happen certainly within the next 2 to 3 slower summer months. The other scenario, of course, which we have to bear in mind constantly, is that we could be experiencing a fairly long-term head and shoulders pattern forming here. This being the left-hand shoulder. We've now risen up to what is probably the peak of the head of this pattern, and again decline down to around about the 2,200 for the Nasdaq could be on the cards for this pattern to be going forward to the right shoulder, which would be at about this level. And then the ongoing scenario from there, if it is a true head and shoulders pattern, is of course that in the fall we could then break through this sort of level, this level here, and experience a longer term downtrend towards the latter part of the year. We obviously don't want to see this happen, but we do feel it's a real possibility. If we do see the market declining towards the latter half of the summer, we do feel that the Federal Reserve should shoulder some of the blame. We do feel that holding at the present 5.25% rate and not really giving investors the feeling that a rate cut is coming any day soon is really putting extra pressure on the markets and possibly on the economy as well. We feel the Fed is focusing too much on inflation and not enough on basic economic activity. It's not an easy time for the Federal Reserve Policy Committee at the moment. The dollar's weakness, in fact historical lows both against the British pound and the euro at the present time, is making it very difficult for the Federal Reserve to feel that a cut, even though it may benefit the overall economy, can only add to the dollar's woes. So certainly the direction of the US dollar is going to be in focus for the next few weeks, and depending on that outcome, we really feel the direction for the market will be determined for the rest of the year. So where do we feel the market is headed in the next few weeks? Well, despite making a little higher progress than we expected in the last month, we do feel that there is going to be a steady decline now, and the market is selling off the 9 to 10 month rally that we've seen. So our advice would be keep playing the downside at the present time, as there's very little upside showing left in this market. Until next week's summary, it's goodbye from London.